Physical gold versus ETFs versus gold mining stocks. What's the best option for you? Now on this video, I'm going to talk about gold, how to buy, or should we say, which type of gold to buy, whether it's physical gold, ETFs or gold mining stocks. Now, as many people know, I'm not a big fan of gold, as I've mentioned on previous videos. I'm not going to go over the reasons why in depth on this video, but I'm more going to talk about if you are interested in gold, which option should you go down. Before doing that, go over to my website, which is adamfayed.com, especially if you're an expat or a high net wealth individual, and see how I've helped people like yourself in the past. Now, when it comes to gold, one of the main negatives about gold is that it doesn't pay a dividend or a coupon or any kind of money for holding it. And also it needs to be insured typically in the typical structure, which kind of leads me to the first point. And that's that if you go down the physical gold route, it's going to be expensive to insure it. It's not going to be particularly safe to actually have it in many cases. And in addition to that, it won't perform better than an ETF. Now, some people say, well, what happens if things get really bad? But the problem with that argument is if things get really bad, you're actually not going to benefit from having physical gold, because put it this way, imagine you had societal collapse and you've got food in your hand and a bar of gold in your hand, or people can see that your pockets are bulging. You're going to be physically attacked in the streets, right? I mean, it's a silly argument, because I don't think if things ever go really bad that having physical gold is going to be useful for you. A good example of this is this. Let's take in recent times. If you were in a place like a Venezuela, or even a place that hasn't done that badly but has been sanctioned a lot, like Iran, what has been the best insurance in those societies? Actually, it's been having second passports and second residencies and having money stored in different countries. So for example, if you were an Iranian and you also had an American passport or a British passport or a UAE residency, or if you were a Venezuelan that had a British or whatever, Caribbean citizenship, and you have money overseas, it would have been fairly easy to protect yourself, because you could have seen some of the radical policies that were being pursued in Venezuela. You could have moved your money out of Venezuela when it was easier to do that. And even if you couldn't move all your money, at the end of the day, you could just move yourself and keep the money that you've accumulated overseas. In comparison, if you tried to go to Caracas airport with loads of gold in your bag, unless you bribe someone, it would be very difficult to take it on the plane. And then, on the way there, let's say a JFK or London airport, obviously people are going to, question it. So some of the arguments in favor of physical gold, frankly, are quite stupid and aren't actually thought through. So I see no reason to actually own physical gold. It is true that in this day and age, you can own physical gold in a cheaper way than has historically been the case. Companies like Bullion Vault and others allow you to store physical gold, and the insurance is very cheap, almost as cheap as ETFs, because it's kind of like a collective system where you're not just insuring it for yourself, but like everyone's buying a chunk of the insurance. But basically it makes no sense, because the performance is going to be identical to gold ETFs. The cost is probably going to be the same or a bit higher. So I wouldn't go down the physical gold route. Now, there could be exceptions to that. Let's say if you're in the jewelry business, that's completely different to buying gold as a pure investment, because it's a bit like saying, the average professional real estate developer obviously can make more money than, say, the average person. And jewelry is a completely different industry. It's probably about seeing like the hidden gems and so on. So obviously when it comes to people in specific industries, buying physical gold makes sense. It's necessary in places like, let's say you're in India and you're a jewelry maker, or in the UK or any country. Of course, there can be exceptions. So I would always go for gold ETFs, even though I don't own gold, over physical gold. But then there's a question, and that's that, well, gold mining companies, they pay dividends. And some of those gold mining companies do well when the price of gold is going higher. So some people ask, well, why not buy gold mining companies? But here's the issue with that. There are positives, but there's also negatives. So obviously, if you only own one gold mining company, it could go to zero, or it could absolutely skyrocket in value. That's one point. So you'd have to buy some kind of index of gold mining companies. And the indexes of gold mining companies typically has actually not done that well in the last 20 years or even 10, 30 years. So basically, I would say, unless you've found some specific stocks in gold mining that are clearly undervalued on a price to earnings ratio, CAPE ratio, and all the valuation metrics you might want to look at, it doesn't particularly make sense to own one or two gold mining stocks. Where it might make sense is, let's say you've found 2 or 3 gold mining companies that are undervalued, have strong balance sheets, they pay good dividends. You might say, well, I'm going to put 1% of my portfolio into something like this because at least it pays a dividend, unlike physical gold or ETFs. And also the capital growth is likely to be better than gold, which long-term goes nowhere, because obviously gold mining isn't just about the gold price. It's partially linked, but there's a whole kind of economics around gold mining. So in certain limited situations, gold mining companies can make more sense. But I would say in the modern world, if you really want gold just as a diversification tool, you know it doesn't particularly do that well very long term, but you just want to diversify a portfolio, going the ETF route is probably going to be the most convenient and safest and low cost way of doing it. And going the physical route makes no sense, as I mentioned. So I would say just for diversification, ETFs make sense. But if you want just small parts of your portfolio to be in stocks which are undervalued, and you happen to see gold mining stocks which are undervalued, there's nothing wrong with taking a small position in a larger portfolio, but I definitely wouldn't put a large percentage of a portfolio into gold mining stocks. Even an index, for example, I don't think it makes any sense. Long term, it's not an industry that's got that kind of growth trajectory compared to something like technology or many other industries.
Depends on every person's individual goals, how much money they want to invest, how long they want to invest. And I did not have at all the feeling from any bank with which I had contact with that they were interested in these things. Mm-hmm. Whereas with you, it was from the very beginning obvious to me that you had experience in these matters and also were interested in what I wanted to achieve.
Anyways, I'm very, very pleased and positive to say that I believe I've picked the right one. The results in the last couple of years have overreached my expectations by far. And I see no reason why it should not continue. Of course, I can highly recommend him as your financial advisor for now and for the future, because hesitating is missing out.
So I'm investing a lot in the Middle East market, but the amount of returns I'm getting from there is very low as per the amount of returns I'm getting from the investment portfolio which you made for me. Obviously, the best result in market right now is Adam.